What if a gaming console was so good a deal that investors actually complained about it? That is exactly what is happening with the Nintendo Switch 2 right now. Shareholders are reportedly pushing Nintendo to charge you more money for the console. And with a major earnings report coming on May 8th, things could change fast. Today we are breaking down why investors are unhappy, what is driving this pressure, and what it could mean for your wallet if you were planning to pick up a Switch 2. Stick around because this story has some twists you probably did not see coming. So here is the situation. Nintendo has been under some serious financial pressure lately. The company's stock price has been sliding for several months now. That kind of decline makes shareholders nervous, and nervous shareholders start asking questions. One of the biggest questions they are asking right now is about the price of the Switch 2. According to a report from Bloomberg, some investors believe Nintendo has priced the Switch 2 too low. They think the console is simply too good a value for what it offers, and that Nintendo is leaving money on the table. Now, from a gamer's perspective, hearing that your new console might be too affordable sounds like a dream. But from a business perspective, especially when costs across the entire gaming industry are rising, investors see it very differently. The argument from shareholders is straightforward. If the hardware costs more to make and the market can bear a higher price, why not charge more? Rising development costs, supply chain expenses, and global economic pressure are all real factors Nintendo has to deal with, and investors want to see those costs reflected in the price tag. But here is where it gets interesting. Nintendo has a financial earnings release scheduled for May 8th. Bloomberg describes this as coming at a particularly challenging time for the company, and that timing is everything. When a company faces declining stock value going into an earnings report, there is enormous pressure to show investors that leadership is making smart financial decisions. One way to do that is to announce pricing adjustments that could improve profit margins. Now, Nintendo has not confirmed any price increase, but the pressure from shareholders is real and it is documented. It is worth remembering that Nintendo has always positioned itself as a company that values accessibility. Their hardware is typically priced to reach as many people as possible. That philosophy has worked incredibly well for them over the decades, but the landscape is shifting. Game prices have gone up across the industry. Hardware costs more to produce. And the days of a flagship console launching at a price that feels like a bargain might be getting harder to justify from a pure business standpoint. The May 8th report could signal whether Nintendo bends to investor pressure or holds its ground. Here is the thing though, it is not all bad news for Nintendo right now. The Bloomberg report also highlights that the company has some genuinely strong performance happening in other areas. Nintendo's first-party game releases continue to perform well. Their theme park attractions are drawing crowds and generating revenue. And the Super Mario Bros. Movie franchise has been a cultural and financial phenomenon. So Nintendo is not a company in trouble. They are a company with a mixed financial picture. Some areas are thriving. Others, particularly their stock valuation, are under pressure. That combination is exactly the kind of situation that puts a spotlight on decisions like hardware pricing. Investors look at what is working, what is not, and ask where more value can be extracted. And right now, the Switch 2's price point is the thing they have zeroed in on. But here is where it gets interesting again. Even if Nintendo were to raise the price of the Switch 2, it does not necessarily mean the console becomes a bad deal. Depending on what the final price ends up being, it could still be competitive with other hardware on the market. The real question is whether Nintendo wants to risk dampening consumer enthusiasm right at launch. A price that feels too high can slow early sales momentum, and early momentum matters enormously in the console business. So to wrap it all up, Nintendo is facing real pressure from investors to raise the price of the Switch 2. With a major earnings report landing on May 8th, we could get some clarity on where things are headed. Whether Nintendo holds its current price or adjusts it, this is a story worth watching closely. If you want to stay on top of all the latest gaming news as it breaks, make sure you subscribe to the channel and hit that notification bell. Drop your thoughts in the comments. Do you think the Switch 2 is priced fairly, or would you still buy it if the price went up? We want to hear from you.